Good evening, and I'm Ravikumar. I'll be moderating the panel discussion today. I once again would like to thank all of you for being here on a Friday evening, which happens to be a 3-day weekend, and seeing a room full of people here clearly demonstrates the mutual respect that CFO Bridge and its clients and partners have for each other. Only that can make so many of you come here and be part of this event today. I think this is not probably, forget a day, not probably half a day in our office lives that we don't hear the terminologies, technology, digitization, transformation, etc. And the extent to which it will go further from here, I will use a quote by a CEO of a very large bank in India, who recently said that the future of my company, as I would like to see it, is to be a technology company that provides banking services, not a banking company that uses technology. This is very similar to what Mr. Ramamurthy alluded to, that the underlying nature of all organizations will be technology-led. In fact, they say many of the differentiations between, we use sectoral differentiations like FMCG, retail, everything. At the end of the day, every company is going to be first a technology company and then into its respective domain spaces. Technology is useful only as long as it is well adapted. And adaptation becomes a very critical part of technology across the organization. Interestingly, day before yesterday, I read a report of a survey of by a global organization called Indeed. Many of us would not have heard that organization's name, which conducted a survey about the readiness to adapt technology across 11 countries. It included India, Germany, France, Canada, and several other companies. And something very interesting came up. The number one country in this group of 11, which are many of them get classified as developed countries, the number one country that is ready to adapt technology was India. Apparently, 95% of the respondents said, we know technology is going to change our lives in the future and the impact it will have on us, and we are confident of handling that, which is amazing. Because those 95% of the people are all the people in this room and people who work for us, the young people who work for us. So and India has never been a great innovator, but has always been a great adapter. We pride ourselves so much on the success of UPI. UPI could not have been successful had the chaiwala and the flower vendor adapted to the technology so easily. So that is the external environment that we are talking about. If so much is happening in the space of technology, finance obviously cannot be far behind. Has to keep pace. Much has been said about the role of the CFO and the change. So I will not dwell into it, but the role of the CFO in future, as it is CFOs in this room and elsewhere, over the last decade are spending lower and lower amounts of time in the record to report process and more on business decision making. And that will be the future, not just of the CFO. Today, what is happening is it is mostly at the CFO level and maybe in large organizations, one level before that. The finance organizations of tomorrow, everybody will be in the role because there will be so much automation in the record to reporting function that every finance professional will have to be involved very actively in providing insights, in making decisions for the organization. And that's where, to enable that, because that will be the demands of the CFO. The CFO and the investors on the board will simply take reporting and statutory functions for granted and ask the finance organization to exclusively focus on insights and decision making. For that, we obviously have to automate, and different people are in different points of that journey of automation. But how that can be taken further, what are the options available, what are companies actually doing, is what we will hear from the 4 panelists today. They each come from a rich background and a different background. So let me start straight away and request the panel members to share some opening thoughts, maybe in less than 2 minutes if you can, on the topic of automation in the office of the CFO. So Vikash, shall we start with you?
Can you hear me? Okay. First of all, Srini, Sundar, thank you for having us here. The challenge with this panel is going to be that we are going to stop you from your dinner and the amazing cocktails. So hopefully we'll make it on time. Look, I echo all the things that you said, right? I mean, obviously we speak about the role of CFO. It is changing tremendously. And if you really look at, I come from a tech background. If you see where do I spend my time today, if you just break it up, I would be spending maybe less than 20% time in the core finance. When I say core finance, it would be record to report, looking at your monthly MIS, and so on and so forth, right? 80% of the time is going to go on strategy of the business, future of the business, talking to your board members, talking to the investor, and creating the narrative like Ram was mentioning. 80% time is going there. It doesn't mean that, just because 80% time is going there, 20% is neglected. If you want the 20% to be a lot more efficient, you want everything to be so seamless, so frictionless, and coming to you in real time, right? Because you want real-time information. And especially for a company like us where we are remote first, and we spoke a lot about remote first earlier, we don't even have an office. We have teams across various countries. We have teams across various states and cities in the countries that we operate. And if you were to go and talk to somebody individually, each one will have a different story, a different number. Then the question for us is, how do you bring all of this together so that one, the information is real time, and second, the information has a single version of truth, so that that can be relied upon and acted upon, right? That's the biggest challenge. And for us, the best way to do that is, we said, hey, look, let's automate everything that we do, right? If you were to look at, let's say, a simple thing like a billing process, right? We invoice to about 100 countries, and we generate maybe about 10,000 invoices a year, right? If you were to do this all manually, it would have been like a nightmare, right? So right from, let's say, starting from the time an order is raised, to the order is processed, to the order is processed, and the invoice is raised, and the money is collected, the entire process is today managed by just one person. And the one person's job is not to raise any of this, just to monitor that the access rights of the system is working well, system is up and running. If you were to go and look at all of the systems, right, you will see that there is immense opportunity for us to automate all the basics that we do, and then divert all the attention and time towards the 80% that I'm talking about. And that is the number one priority that we need to do. And historically, if you talk to most finance professionals, you will find that this skill they've not learned. I have not learned it. I'm sure most of the people on the panel have not learned it. So this is a skill that you need to build. And if you don't build this skill over time, you are going to become irrelevant very soon. And post-COVID, I can see a major transformation happening in this area. Tools that are available today are amazing. Like anything you want to automate, there is a tool available and the competition available. You can pick and choose. So for me, at least, the main discussion really is, do you have the mindset to automate everything? If you can't think digital, if you can't think automation, it will be very difficult to operate in a world that we are going on. So that's what I would probably say to your question.
Thank you. Jaipal?
So, completely agree with what Vikas was just saying and, Srini's opening remarks. I work for ID Foods. I'm sure many of you would have had our products. Having spent decades on consumer, my lifetime I've spent, the career has been mostly spent on consumer brands. I feel that running FMCG business, among consumer brands also running FMCG is really difficult. Within FMCG, food businesses are even more difficult. Within FMCG and food, I think fresh food, what we run, 5-day shelf life, is, difficult cube in our CA language. And running FMCG food fresh without technology, I would say that is impossible. Just now Srini was mentioning that a bank CEO said a technology company providing banking services. In fact, we internally say that ID runs on IT. We say that we are a food tech company or a technology company delivering or manufacturing and retailing fresh food. That is how we at least internally have sort of generalized this use of technology. Very, very extremely heavy use of technology is what we do. And I heard in a CTO Bridge, Satya was saying that when you ask some approvals for CFOs, they have a little bit of grumbled look on their face before approving. I think that is changing. I definitely think that is changing, and if it is not changing, I request all my fellow colleagues here to change that, because I strongly believe in, sometimes why there is a grumble, because we find it is expensive, it is, it consumes cash, all of it. I think, a good solution might be expensive. A bad one can cost you a fortune. So we should all keep that in mind before, grumbling and not approving good ones. Having said that, for example, in our organization, our FP&A team does not do MIS at all. In the initial call which I was having with Sundar and Srini, that's what I was mentioning, that our FP&A team starts with the insights and analytics on MIS. There is nobody who prepares MIS today. That's the level of technology which is embedded in ID. And maybe I'll talk more about once we proceed through. Review over to you.
Yeah, thanks.
Yeah. So I think I'm going to echo a lot of what has been said. But I come from Fireside Ventures, which is a venture capital fund. We invest in early stage consumer companies. And typical of any early stage company, there is a lot of control on how the cash is used, right? Especially around when it comes to support functions and CFO functions especially. But you think about this, there is so much technology which is developing on the front end, and if the back end does not catch up with that, then the front end is going to fail and is going to be at significant risk at some point in time. Think of the investment which you're making in this company. You're taking a certain amount of risk. Why do you make this investment? Because you think there's going to be a big opportunity loss if you miss this boat, right? I believe the same about investing in technology as far as reporting and any CFO function is concerned. You need to make that upfront investment. Yes, you will be mindful of not investing in something which is not ready for you, because you need to be very mindful of the time and energy which goes beyond just the cost of it. But if you don't take that risk, then you're taking a long-term risk of letting this company, into a more undynamic situation in the future versus what it is today.
Srini?
So, good evening, everybody. Let me draw a slightly different perspective, and all of the comments of the panelists are very, very valid. But having been a CFO in Unilever, then Bosch, and then becoming joint managing director, so I've spanned across industrials, consumer, automotive, and now as a board member in fintech and also advising VCs. I mean, the fact that one way to address this whole aspect of technology and the CFO is to make the CFO lead the technology change, whether it's a digital or whether it's a transformation. And lo and behold, at least two companies on which I am the board, I happen to be the audit committee chairman, but also the chairman of the technology committee. So the chairman and the board collectively think that this is the guy who will let the train on technology go fast, but at the same time ensure that all the controls and all the aspects, the nitty-gritties of how technology can be effective and should be effective is well adhered to. So from that perspective, given the changing role of the CFO and what we saw in the previous session, it's very important for every CFO to ensure that his backyard is absolutely perfect and clean and he's able to contribute At the same time, ensure that the learning curve of the organization on technology is going with speed while ensuring the hygiene elements. We have seen, I mean, of late in the newspapers and media, you have seen some of the issues that on basic levels of controls, basic levels of risk management that has come up. And in all of those aspects, in every aspect of the CFO, technology can play a very, very important role. So my conclusion would be that not only technology for the CFO's office is not only a hygiene, or not only a good to have, but it is a basic survival. So therefore, for every CFO aspirant to crank up that skill development on technology is very fundamental to future role of the CFO.
Thank you to all of the panelists. Let's start with the digitization of the finance function, which is at the core of what we are talking today. Can you share your experiences and examples of how real-time reporting is happening and how analytics is being leveraged to drive greater insights in the organizations that you're associated with? So again, let me start with you, Vikash. You've already given one example of that, of 10,000 invoices generation and the entire process being handled by just one person who just monitors it. But we'd love to hear a little more from you on that.
Yeah, sure. See, if you look at like one aspect that at least I always had a challenge, right, historically was you can always automate a lot of processes, right? You can automate a AR process, like I mentioned. You can automate a AP process, how the vendor submit invoice, etc., etc. One aspect that I felt which was missing really is the entire change management that happens. See, one of the issues that we encountered in our finance team really was, a high attrition, right? And there could be a lot of reasons why the attrition happens. But through the attrition, by the time you get a new resource and onboard the resource and then make the resource productive, you're lost like 6 to 9 months, right? And the entire knowledge that was available to the resource earlier is not fully transitioned also, right? So we found that, end of the day, then how do you capture all that is happening around you in a manner that is very seamless? And we use a tool called Confluence very much in the company, right? I'm sure some of you are using it. Great. If not, it's a tool, I feel it's a must-have tool, right? It's a tool that helps you collaborate heavily across the organization. It's a very real-time tool in terms of how do you capture what's going on in your business, what's going on in your team, what's going on in your processes, etc. And you can edit, re-edit, document everything that you do. So we mandated our teams to use this tool for everything that they do in the company, right? More so in the finance team. We said, okay, if you're going to have a control framework, please document it using the tool. If you're going to put a business case to make some purchases, please put a page towards it. Document why are you buying, what are you buying, how are you buying, etc., right? Document all the areas of work that you're doing. The moment you were able to convert all the tasks and activities that teams are doing in a digital form, right? This is available for people to review, refer, etc. easily. And we found a side benefit of this, right? One benefit is, of course, it helps in change management. Second benefit is it becomes a very good record for you to substantiate various things that you're doing in the company for subsequent processes. It can even be audit processes, which I know right now we're all, even we do most audit processes very digitally. How you submit samples, how you collect samples, how you review samples, how you exchange Q&A, etc., etc. So to me, there are such tools available which is helping you not just manage your core processes, but even fringe processes, which are actually very much going to influence how you're going to behave, how you're going to run your company and your finance things. I hope that helps to give you a little bit of a perspective.
No, thank you very much. Very useful. Jaipal, can I request you?
Sure. Yeah. So, digitization is, like I said, we apart from running the fresh food for us, because the inventory shelf life is only 4-5 days, we must ensure that the entire inventory is consumed on the same day. If you come to our organization at the end of the day, we take pride in ourselves saying that our inventory, the finished good inventory particularly will be 0. What we believe is without digitization, without automation, which is what Ravi wanted us to focus on in this point, it just wouldn't have been possible. The other strong differentiator which we have compared to any other FMCG in the country is we do not have a super distributor, sub-distributor, area distributor concept at all. We are straight from factory to the retailer. Therefore, what happens is we will have 50,000 invoices in a day. In one country, I'm saying, and then we have 4, 5, 7 countries where we operate. Of course, India is the largest, and other countries, the numbers are small. But put together, it is 50, 70,000 invoices in a day. Even if there are 2 to 3 line items in one invoice, if you look at our sales register for one day, it has about 200,000 lines. One year sales report will not come in one Excel sheet. We have quarterly reports. I mean, that's what we were doing before digitization. To manage it from there, and Vikash just mentioned a tool called Confluence. We have another tool called Fountain 9. Those tools are the ones which make survival possible. I'm not even saying survival easy. It would not be possible if I don't have Excel 1 year sales register. Then how do I start with anything? Similarly, in the accounts payables, again, we manage the entire, the GCC for GCC, when I'm saying Global Capability Center for all the countries, sits out of India. Every country has a different revenue recognition. Every country has a different way to account, GRNs, the taxation, VAT. Some countries are still on VAT, we are on GST. Countries are mostly slowly moving to GST. The input credits available on different countries in different circumstances are different. So again, if we would not have digitized that whole AP process, it would have been almost impossible. And what has also happened in digitization, 10 years ago, we were digitizing ourselves. What we have seen is over the period now, we are evolved, our partners are also evolved. When I'm saying our partners, be it a customer or supplier, they are also evolving. I think that is what is helping us. When they are digitized and we are digitized, that is when the power is showing, and that is when these kind of complex transactions are being made possible. Otherwise, I'm not even sure. Different time zones, different countries, different regulations. I manage the global finance role. I mean, yeah, I cannot even imagine. Yeah.
Jaipal, how long does it take for you to close your books?
Yeah. So, we have let go, in our organization, we have let go of a period closure. We say the MIS will be more or less available every day. Of course, there are closing entries like salary and rent, etc., which comes, but what we have done is, in the BI, SAP of course is the ERP, but in the BI what we have done is, based on the last month's month-end entries, it auto-posts the daily entries. Right? Let's say my salary for the month is 30 crores, for example. So it will post 1 crore every day automatically. And of course, at the end of the month, it gets reversed and the actual entry gets passed. But what we have committed to, our investors is that you will get the MIS on first of every month. Because there is nobody making the MIS. MIS is already there. There are every entry which is getting accounted is digitized. There is nobody even entering. I don't have accounting entries done at all because it is scanned. So we have barcodes for each cost centers, and what we say is, as soon as the invoice comes, you paste those barcodes, scan, SAP entered. Right? Because if you say that this has to be the cost center, this has to be the GL, this has to be the country, this has to be the region, this has to be the category, and to be able to have the MIS on first with all the cuts, what we have done is we have defined every category as a cost center, be it category, channel, city, geography, SKU. And all we say is, if it is, see, the accounting is mostly an AR invoice or an expense invoice. We say that just paste these barcodes, scan, and it will get accounted in SAP. So, I mean, technically, Ravi, to answer your question, on 31st, 12 o'clock, we can give the MIS for the next month. That is where we are.
So we said we'll talk of best practices. I don't think there can be anything better.
And I'm happy to demonstrate that. I mean, if any of you want to, we have spent a lot. Why I'm so proudly saying is we have spent a lot of time in reaching that stage. It was not easy at all. It was really difficult, but we have sort of achieved it. Again, technology. Without technology, we wouldn't have been able to.
Excellent. Amit, can I request you?
So I'll pick an example from one of our portfolio companies, which is in the fast fashion sector. In a fast fashion sector, the biggest risk is around inventory management. You cannot have too less of it. You cannot have too much of it. Too much of it will lead to a loss of inventory at some point in time because the fashion trends are moving very fast. And it'll eat up into your small margins which you work on in a fast fashion industry. Too short of it will make the customer's experience terrible and they can move away. This company is using AI to identify global trends in the fast fashion trends and bring it to India in a very cost-effective manner. Now that's the front-end tech. But at the back end, they were managing entire of this inventory in Excel sheets and manual entries. Now you think about the kind of inventory buildup which will happen because of that, because you don't have real-time information of what is the excess inventory which you're lying or where is the shortage. And when we did the diligence of this company, we had about, and this is a very, very early stage company, so we had $1 million of write-off of inventory at that stage. And then we got together with the company and, we said, you built a lot of tech on the front end. How about the same tech team builds something for the back end? And that is where your margins are going to be significantly improved because you're not going to have these write-offs in the future. So the CTO, and he's a co-founder of the company, really focused his efforts, took away time from the front-end management to build this technology for the back-end inventory management, which is integrated today from the order management system. They have a philosophy that if you spend about 90 seconds of time while scrolling on your web page, there's a 90% chance that you will order this inventory at some point in time as a customer. So their order goes in right after the 90 seconds pass. Now, if you don't have a real-time information that this order didn't come through in the next 3 days, you need to cancel this order, otherwise you're going to have excess inventory. Now this technology which they've built is able to capture this in the 3 days time frame that the order hasn't come in. Otherwise someone was sitting and manually doing this. This is a company which launches about 150 SKUs every single week. And they're going to scale up every week from here on, right? This is just the beginning. One of their competition does 1.5 million SKUs per week. So that is the kind of space which they operate in. And this led for them to really look into this problem and solve for it. Now they are integrated with their suppliers, they are integrated with their order management system, which also talks to their inventory management system. And the inventory efficiency has gone up so much that today they carry only 3 days of inventory in the company. And they had a diligence very recently and there was no write-off at all, right? So this is how I think technology is playing a very, very significant role in both front-end and back-end management being bridged. And all of this activity, while the CTO was involved in developing this, has today the inventory management become a much more CFO function than in the past, which used to be a procurement function, etc., because it is impacting your margins on an everyday basis almost, and also helping in demand planning for the future.
Thank you. Srini, can I request?
Yeah. So let me give you an example of a company on which I am sitting on the board. It's in fintech in the insurance sector. And in insurance, you have more than 10,000 products, and within each of the product, you will have to provide insurance to different age groups, different types of industries and others. So when it comes to the CFO, and he has to do performance steering, at the end of it, there is a certain sort of profitability he has to achieve. And if you are in the business of risk, managing the risk of a risk business is hugely complicated. And that's what the CFO is expected to deliver and send a response to the sales force in terms of what is the nature of risk we are covering, are we on a high risk path, what is the mix of the business that's happening, what's the sort of an actual valuation that is going to impact our balance sheets. So it's a very, very dynamic situation. So the CFO, one, he has to have a very big role in implementing the systems that will give him the analytics that is required for him to take the decision. But in the context of a larger role about storytelling and fast response, he has to be able to assimilate, get the insights, and respond to say that, yes, what is the action for the next day? Given the fact that in an insurance business, you have agents, you have own employees, you have different channels, you have digital. So there is multiplicity and highly complex nature of selling small ticket items, or for a corporate, you would do a big deal. So the complexity of a CFO role, I don't know whether you call it fractional or not. It is almost like the Ravana who has to have 10 heads to be able to manage the complexity of the business. Well, we would like to have a Rama with 10 heads, but nevertheless, the complexity of the business is so huge. And for people who are in the actuarial valuation business, or indeed on the board, it becomes very complex to be able to decipher, to say that, yes, are the provisioning, are the balance sheet, and the valuations that are done for the business of the future is all very appropriate. And without a very strong enterprise layer and a very superb top-of-the-line analytics layer on top, to such an extent that when I am able to, on the board, when I am able to ask queries, the team is able to do the query on online and on a real-time basis, able to give me an insight which satisfies me that, okay, the governance and the statutory compliance on many of these aspects is in order. So to the question, I mean, I can't imagine how anybody, I mean, I don't know how LIC used to run or GIC and others used to run, but at least now I can't imagine that how a fintech or an insurance business where the core is technology and the CFO can provide and stand up that sort of an assurance that is required.
Thank you, Srini. Let me just add one comment. The word that we hear very often in businesses today is customer experience. And customer experience has now come to the core of determining the success and growth of an organization. And companies now measure the kind of customer experience at every step in the customer's journey of buying, from their getting informed to placing the order to getting things. In fact, we all order more on Amazon because we know we can return it. And that has happened because their process for collection of the returned goods and making sure you get your money back is outstanding. And that function, those two functions are very finance-led, with a lot of finance involved in it. And now the finance function will have to play a greater role in the area of customer experience, because many of these things that we do, the world is becoming more B2C now than it was before because of online shopping. And therefore, the activities that we are responsible for, which used to be the traditional, we used to call it, boring activities like invoicing and posting the invoice and then reconciliation and collection. That now has changed because the end customer, our processes are directly interacting with the end customer. And therefore, getting those processes right, which is a finance domain area, is very important. Let me switch to the topic of, we spoke about reporting. One of the areas that finance professionals, to a large extent, don't seem very comfortable with is in the area of, for example, storytelling and communication. We've always been told that we communicate too much financial jargon, and all that we understand is data, data, and data. And if we have to make the transition from, in order to influence the business, we'll have to make a transition from giving importance to what we say to giving importance to how we say it. Because how we say it has a greater influence on decision making than what we say. And one of the tools available to make your presentations more impactful to decision makers is data visualization. Unfortunately, finance professionals and probably many professionals don't come into jobs well trained in the area of digital visualization. It's more on the job training, but it's become a very, very important skill. So let me ask two of the gentlemen here to talk about data visualization. Let me start with you, Jaipal.
Sure. Ravi, like we mentioned, there is nobody who now is making the MIS. So therefore, the teams which were now earlier, like you said, what we say, the teams who were saying what, don't have anything to do. So they have now understood that I better do the how better, right? I mean, if I don't have the what, and if I don't do the how also better, then how do I survive? And in that process, what I have realized is those teams, when they work with the technology function, again, when they have now worked with the CTO, saying that, okay, the MIS is ready, I have to now present it better. They have created on almost a live answer for any possible question. Like, I just heard Vikash saying that that in the board meeting, when you ask a question, sorry, I think Srini mentioned this, that in the board meeting, when you ask a question, it is almost live available. So what has happened is when the FP&A function, which we call, if they do not have to make those every report, reconcile this, that, they are focusing a lot more on the how of it. And along with the technology function, they are making every possible question a live answer. What we have done, another very revolutionary thing which we have done, we have cancelled all Microsoft licenses. We said only then you will get to the how of it. Until Excel is there, you will keep using Excel and 10,000 rows, etc., etc., etc. We cancelled Microsoft licenses. Very few people, of course, have it, but across the board we cancelled. And that is when we said there is a BI tool, there is a visualization tool, and we have told, including our board, by the way, which include VC investors, we said whatever possible questions you may want to ever have, please keep telling us. We will keep building those questions in the BI, and we have given access to the BI to them. We are saying we will not even send you. Your question, you send us one shot, we'll answer every month, every year, every quarter. Last year, show me 3-year CAGR, this, that, all of that is built in. You have access to our BI, please take the answer directly from there. Where we spend time on, therefore, is ensuring the accuracy of those dashboards, the accuracy of those hows, in Ravi's words. And that keeps the team also motivated. I have seen that the FP&A team, which was not very motivated, saying that, okay, I'm doing this, and then somebody else, they were almost to the extent, I would say, I don't know, for a lack of a better word, pissed off when somebody asks a question, okay, again, you'll have to do this, a whole thing again and again. But now they are, with the enthusiasm with which they keep asking, okay, do you have any other questions? Tell me, I'll build it off, and, the how is answered. That is at least how we are doing in the org here.
It's a huge change, Vikash.
See, if you really sit back and say, okay, exactly what happens in a business, right? If you have to condense everything, it boils down to probably 3 things. Everybody's trying to find out what the hell happened, right? That's the first thing, right? What happened? And second, they want to understand why it happened. And third thing we want to understand is, if it happened, we know why it happened. If things that are working well, you want to double down on. Things that are not working well, you want to stop. And then you want to improve things that are somewhere in between. Like, this is crux of, that's all we try to do every month. Or every month, every week, every day. That's what we're trying to do, right? And more what is happening is, businesses, especially like us, where we cater to, let's say, 10 million developers who are using a product across 100 countries. It could be spread across a large enterprise, right, like a big bank. It can be a large tech company like a Google using it. It can even be like a single individual developer buying. So that's a strata you're covering. And this covers across 100 countries, right? And clearly, every time there will be some places it will work, some it will not work, there are issues. Historically, most finance professionals are very variance analysis oriented. They're happy to see this is what happened last quarter or last month, this is what is happening this quarter, this is the difference, produce a variance analysis and give a reason for it, right? That's really what happens. What that does is it gives you like a very tactical answer as to what is happening at a line item level. while that is good, it is not conducive to like create a plan and double down on, right? You can't put millions of dollars behind that plan, right? Therefore, what is becoming more and more important is pattern recognition. Are you able to recognize patterns that is happening in your business? Can you correlate that pattern not just with your internal factors, but also with your external factors? Businesses like us always have an influence in terms of what's happening in the larger economy. If the interest rates in the US goes up, spending drops, that will have impact on how we are going to operate, right? So pattern recognition, looking at external factors and internal factors is becoming like a key to decipher areas that you need to invest, areas that you don't need to invest, and areas where you need to hold your ground. So, and therefore what we did, at least as a company, is, today my FP&A team has just 2 people, but my data analytics team has like 12 people. And their entire job is to make sure, one, data is accurately maintained, managed, etc., converting all of the data into visual recognition, like dashboards like Jaipal was mentioning. And these dashboards are available real time, not just to the management and the people, but also to our investors and board, etc., who can help us like manage the business, right? Pattern recognition, trend analysis, showing data historically correlated through graphs, etc., is becoming like a key tool for our decision making. And also one other factor that is happening in most boardrooms and most management teams is, most people that are going to make decisions may not be financial professionals. You'll have a bunch of people who are non-finance background. So how do you explain non-finance people finance? The only way to us to do that is through visualization, right? Show data, show patterns, show trends, show graphs. It's so easy for people to like understand, right? So therefore, I'm feeling that, more and more, again, this is no more becoming like, good to have. This is also becoming like necessity for most people, especially in businesses which are very complex, very volatile, spread across regions, millions of transactions. If you're in that type of a business, visualization is the only way for you to like make sense out of it and take actions.
Having heard that, the other area that the CFO is now having to focus on is compliance and risk management is becoming even more important and difficult, because non-compliance becomes visible far more easily in today's technology connected world, because even the government organizations are using technology. Today, with GST, you can see that anything that any small company does or does not do, the government immediately knows about it. So the visibility of non-compliance has increased a lot. As far as risk is concerned, the focus of finance professionals has changed from managing financial risk to managing both business and financial risk. So in that context, let me request 2 of the panelists here. Srini, can you share some thoughts on risk management and compliance related automation and your experiences around it?
Well, as much as we say that India has gone digital with UPI, and fintech is definitely one industry which has exploded using technology. But at the same time, in every business, the level of automation has significantly gone up. But at the same time, the flip side of that is that risk is in every business has gone up significantly. Partly because the speed at which the business is being done, partly because there are very intelligent people who make their career and business about hacking and crossing many of the barriers which companies have set up. And therefore, the whole aspect of managing risk becomes extremely, extremely important. And therefore, I would say that this whole aspect of risk not only comes from transaction, but also comes from the uncertainties in the world in which we live in, whether it is weather patterns or whether it is other types of risk, the ambiguity, and therefore you are never in a deterministic mode, but you are always in a probabilistic mode. And therefore, all organizations across my experience area, whether it's in consumer or automotive, I mean, automotive business has got disrupted. So when I used to do the risk matrix to present to the board, the fact that the business is going to get disrupted with EV and others coming in, how do you manage such a risk? So what aspects of your business and what types of contracts are getting entered, how long term are there flexibility clauses in those transactions becomes very important. And therefore, in many of those, the fact that there is a technology layer, there is a documentation aspect of it, which you are able to decipher by using very expert tools, throws up many of the exceptions. That's one. Secondly, in fast-moving consumer goods where there are zillions of transactions going on, it's no longer enough for us to say that I will do a sample check. Those days are gone. Nowadays, there are softwares and there are BPOs available which are focusing 24/7 on risk assessment across the globe, where 100% of your enterprise transactions are being monitored through software. So for Unilever, we have a small team of about 12 people who are monitoring risk for Unilever across 120 countries with a software running based on algorithms, looking at the enterprise software and raising tickets on each of the countries on the types of risks that are coming in and the sort of non-compliance that are coming in. Last but not the least, let me give you an example of the insurance industry. As you know, insurance is a very underpenetrated market and hence a very high growth market. On the other side, it is highly regulated market with IRDA being there. So on one side, you have a high growth, almost a free-for-all going on. On the other side, you have a regulator who can sort of cancel your license as well. So the CFO has to, in fact, most of the at least 2 CFOs I have dealt with are losing their hair very fast. And partly I could establish a correlation. But having said that, they are always asking. They are not there, but they are banging the door of the CTO to say that, yes, what is the sort of technology and tool you are going to be able to provide to keep enhancing, because the types of products that are going to come, the types of, nowadays the IRDA says that file and launch, and then later on we will catch you if something goes on. So the CFO is the guy who has to provide that assurance, and therefore the use of technology becomes fundamental to the existence and the business continuity of every such company.
Thank you, Srini. Amit, your comments?
Yeah. So being from the VC industry, one of the key documents which we use for risk mitigation is a shareholders agreement, right? It has several layers of risk mitigation in terms of how do you deal with non-compliances with the company, a founder not being compliant, company not being compliant, etc. And these are vast documents, 80, 90 pages at the minimum. We have a portfolio of about 45 companies today, and it's only growing. And then there are several stages at which these shareholders agreement keep getting made. How do you and the biggest point you have to deal with is how do you benchmark these, right, when you do the next agreement, because you want a standardization there. So recently we have adopted an AI technology where we are able to sort of just do a GPT search. It is a generative AI technology where if I want to know what is the timeline for information to be given by this company and have they crossed that, I have to just search that in this open software which is available on my mobile, and I'm able to get the answer for all of the 45 companies. I can also search various other elements of this shareholders agreement. It becomes a benchmark for subsequent negotiations which are very live and very active, and you need to be very respondent on a minute-by-minute basis. It becomes very easy for the board members to really look at and mitigate when they see a risk coming by seeing if they have certain rights which can mitigate that risk. So I think AI and a lot of these technologies which are coming together today, even around managing compliances on a day-to-day basis, right? There are several changes in law which keep happening. Today our government has implemented faceless assessment in income tax. There's a GST which is completely digital. If the government is doing all of that, that means the businesses need to be 2 steps ahead, as Ravi also mentioned earlier. How do you make all of that happen is through use of technology, and AI is going to play a big role there, as well as certain simple customizations and digitizations over and above your Excel sheets, like just macros can solve for a lot of these elements.
Thanks, Amit. Jaipal, you had something to add?
Yeah. So I have a very different take on risk. I somehow feel that risk is something we don't see. Right? I mean, if we would have seen COVID earlier, then we would have found an answer. If we would have seen, any of the banking fiascos, Lehman, the oil fiasco, because of, like all CFOs, I also manage risk, and that is what gives me sleepless nights. What I've come to conclude that risk is something you don't see. If there is some tool, a technology tool which can help you foresee a risk, it can only, make your sleep better. So that is where we use technology for foreseeing risk. Whatever we have seen, I think there is an answer, or we know that if this triggers, this is what will happen. As long as you know the outcome, the impact of the risk is much lower. Let's say we say that, the risk of crude going to 150 is there, but we know the outcome and therefore the impact is lower. We have seen a lot of these tools helping us foresee some of those risks and have helped us a lot. Similarly, when Ravi, when you mentioned about compliance, I also see that compliance is something which gives us sleepless nights if it is not done well. If we lose our peace of mind. So there is no metric, no financial metric, be it EBITDA percentage, ROI, ROCE, nothing will work when the trade-off is sleep of, loss of sleep or not a peaceful mind. So therefore, again, another tool which really ensures very good compliance, I think, is the answer for both risk and compliance.
Thank you. I'll just add one thought of my own experience. So at IBM, the CFO managed enterprise risk across the organization. And it was the leadership team of IBM India met every month. And one standard item on the agenda was enterprise risk. Otherwise, there were several topics discussed, etc. And I used to obviously go prep the CEO. The CEO wanted me to prep her before the leadership team meeting on different topics. And when I used to when it used to come to the topic of enterprise risk management, she used to tell me, Ravi, why are you always telling me risks? What about enterprise opportunity? Opportunity goes along with risk. As we have seen in COVID, where the huge risk provided so much opportunity to online and other things. So probably, and she would tell me, the next meeting, I want you to tell me opportunities as well as risks. Don't just come and tell me enterprise risk every time. So obviously got me thinking. And so that is another perspective of risk. That in managing that, is there somewhere that if you manage it very well, is there opportunity also? So just keep that in mind. We're well out of time. I think we need to, in fairness, we need to leave some time open for Q&A from the audience. So, ladies and gentlemen, any questions that you would have that the panelists can help answer?
We'll deal with the questions as you want to do that while we have, or you want to do it?
Sorry?
No, you want to do that while there is mocktails and dinner, or?
That's up to you. Maybe now that I've already said, we'll take one or two questions and then we can go to mocktail and handle further. Sorry.
Yeah, what role do you see tech playing in better communication of financial performance to shareholders via annual reports? Because even now when you see the annual reports, the drudgery of it, the 150 pages of meandering, which an average shareholder cares less about, when is the annual report going to be a document where the captain of the ship is talking to the shareholders without having the corporate affairs ministry peeping into what they're talking to shareholders? It should be a document for the owners of the company to know where the company is going, period. There are plethora of other returns that you are filing. Why does Why does a shareholder have to know section so-and-so of Companies Act? It gives a headache. When will that go away? Will it go away at all?
You know, reporting is getting only, reporting to the public is only increasing by the day. But you're very right. When you pick up an annual report which is this thick and runs into hundreds of pages, it looks like all that is being done through the annual report is people are following the letter of what is required, not the spirit, which is your point. Let me request Srini to take that question. You're on the board of companies in the middle of annual reports and all those things. Tell us a little bit about.
Well, I think most companies, while they prepare the annual report, from a company perspective, they prepare it only for statutory purposes. Yeah, they are not using this as a communication tool, though you do see some glossy pictures and in the front pages, but other than that, this is a statutory compliance. The actual communication that they want to do is more through the investor relation deck and the engagement that they have with the participant in the capital markets. I do believe that, yes, there is a need for far greater change to come in this area, because many aspects of a company's business, for example, its own carbon footprint, its sustainability report, are many aspects which are not covered currently, though BRSR will bring something, but a more eco and shareholder friendly communication is something which is, I think, the need for the hour. I would agree. But from a company perspective and from a board perspective, it's a tick in the box. The business is not run, nor the communication to the board or other stakeholders of the company is done through the annual report.
Okay, let me just take one question and then I see two hands being raised, so sorry.
From a finance tech perspective, it's as a finance person, you generally look at the top line and the bottom line. But I've heard an economist say, generally a finance person who manages the cost better is supposed to be the champ of that. So from that perspective, since performance is generally measured by revenue, is there any fintech or anything that determines performance based on cost, so that as a CFO or as a chartered accountant consulting firm, we can measure the performance based on the cost a particular person has incurred? If he's incurred it wisely, that's what I meant.
Yeah, to some extent, effective and efficient cost management gets reflected in your gross margin, which is why investors pay so much attention to even minor changes in gross margin. But Jaipal, you can probably.
Yeah.
I'll just add to that. See, my point is, any CFO or a finance person can incur an expense. An expense can be either an investment or it can be a loss. For example, tax is a loss, so you minimize the loss. A good investment is a good expense. So from that perspective, is there any tool that measures that whether a CFO or a finance person has done a good job on that perspective and shows?
It's a little complicated, but
No, I mean, see, for expense, there are two. I think expenses are much more easier to manage. What is difficult to manage is the revenue, the growth, etc. Right? Expense, we all understand it so well. And I don't think today's CFOs are spending a lot of time on expense management, because there are already AOPs, there are already plans, there are budgets, there are comparatives. If in FMCG you are there, you know that if I have to compare with the best in class of an Nestle, HUL, ITC, Dabur, Marico. So those line items gives you such a strong comparative. And because see, if we go back 10 years and there was the democratization of smaller companies had not happened. But today with all these tools, all the SaaS, all the technology, I think every company is on a level playing field as far as expenses are concerned. So I don't, at least, I have not seen expenses being a bigger challenge to manage. The bigger challenge to manage in my view still is revenue, gross margin, growth, markets, customers.
Just to add to what Jaipal is saying and maybe to answer your question, I think the way to look at what you're saying is look at certain expense to returns ratios, right? Like in consumer businesses, LTV to CAC is a measure, which is what is the lifetime value you got from a particular customer who you have acquired through your marketing costs. There are several tools today which track all these metrics. Now, if you are able to track these metrics, then you know whether you're getting the right reward from your investment or it's a loss, and next time you're going to make better decisions. I hope I was able to answer some of that.
Thank you.
Just to build, I mean, what I've seen is that your competitive position in the market is either pricing led because of your market position and all of that, or it's cost led because you are a cost leader. Now, where your market position is pricing led in a way, if somebody comes and cuts your pricing, then you have a problem on your margin. But if it is your cost competitive, then you have the flexibility to do it. I mean, at least in the 3 companies I have worked and others, I have always seen, and these are not startups but large companies, every I would say 5-6 years, there is a need to shake the tree, because every person, every department says, oh, I am at the best of the cost. So I personally have implemented ZBB across all the companies I have been, and anywhere between 12 to 17% reduction in cost base we have achieved. So your point is valid to say that the sharpness of cost leadership is as important as pricing or anything else.
Thank you. One last question. Yeah, the gentleman right there.
Hi. Good evening, gentlemen. Thanks for a wonderful session. I just had one particular query, and given that the investor relations role is becoming very central to whatever CFOs are doing right now, and it has typically been very rudimentary in terms of how the approaches have been or the ways to probably work around that. What are interventions that you have done in your own businesses specifically to investor relations that you think can be looked at by larger organizations as well? Yeah, and I understand the analytics that you are working in to go for the final outputs, but is there something in the final outputs or some kind of interventions that you're doing on a regular basis which is helping you make it better? Thank you.
Yeah, I can take this because I manage investor relations. See, what I have learned of investor relations is once the investor starts trusting you, is when this, your question becomes easier. And when I say trust, no, I've also understood that trust does not mean that nothing will ever go wrong. Trust means, and that is the trust we have to establish with the investor. Trust, in my view, means that if and when things go wrong, the investor or the shareholder or the board, the management, whomever you are answerable to, trusts you that whatever was required for this to not go wrong was done, and still it went wrong. And they have the trust that now whatever is required to put it together back will be done by you. And I think once you achieve that, I think that you have achieved all of it. Then it is only a numbers and output and etc.
Yeah, I think just to quickly add to that, apart from that you've done all that you can, I think investors are also interested in making sure, in understanding that this thing will never happen again, right? Do you have the right processes to handle that? Okay, just want to conclude this discussion. I want to thank the panel members, very, very rich in their experience, and thank you very much.